Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 24, 2022. Hope you're all having a good weekend. Let's take a look at stocks to avoid. These stocks are diluting the share count, so that's not a good sign. Let's look at such names here and see who is diluting their share count. We should avoid such stocks and go from there. So with that, let's jump in. Look, we got list here. All these stocks are priced more than $10, as you can see here. We'll cover stocks with price less than $10 shortly, but we'll start with the price with stocks with price more than $10. Top of the list is Rivian. Rivian is supposed to be a Tesla killer, but did not do very well. Look, performance is it's down in 1 month, 3 month, and they're down 81% from 52-week high. And look, they have good cash, $18 billion cash, but free cash flow is negative, and they got $1.5 billion debt. And look, they are polluting and diluting their share count. Look at the buyback yield. That tells you they are issuing more stock than retiring. That's why it's the high buyback yield. And they're also paying 2% debt, 2% interest on their debt, which is not too big. Top of the list is Rivian, so we got to be careful with such names here. Look, Rivian is not making money right now. Look at the net margin here, a big time negative here, and look at the gross margin, negative 845%. So this company is losing money big time and also issuing a lot of shares and diluting their share count. It's a top candidate to avoid from a share buyback perspective and from a dilution perspective. And also look here, price to sales ratio is 100 plus. That tells you, this is very, very pricey stock. Valuation is sky high. They got to do perfectly for the stock to go higher. It's very difficult in this environment. So I would say avoid Rivian at these levels here. Let them stop diluting the share count. Then we can take a look at Rivian here. And next is Lemonade. Lemonade is an insurance type play here, artificial intelligence play for insurance. Look, this is issuing a lot of stocks. Look, 51% negative here. They're issuing more stock than buying back. That's why it's the second most leader here. And look, these guys also EPS growth, earnings per share growth for next year is negative. So one more reason to avoid this stock here. And look at the performance here. All the way from 1 day to 52-week high, it's all big time negative here. So I would say avoid this one. Don't think it's a cheap stock and buy. Instead, avoid. Then you got here SHLS, Shoals. Look, this one is also big time, stock dilution leader here, minus 48. And look, these guys have a lot of debt on the balance sheet. Look at the debt load here, 96.8. Not even a joke here. So we should be avoiding this company also here. And we got a few more here. Keep watching the cost of debt also. Some companies, they're paying so much for their interest rate on their debt here. You got Maxeon here. It's a solar play, as many of you know here. Look at the amount of interest rate they're paying. 14% interest rate. It's not a small deal here. They got $187 million of debt. You got to be careful in such candidates. But look, they got at least some EPS growth for next year, which may not be so bad, but they're diluting big time here. And we got here Lightspeed. Many of you know this company here. This company stock came tumbling down big time here. Look, they're also diluting. And we got even TuSimple dilution leader. So you got to be careful with such companies. And look, we got one more here, NCLH, Norwegian Cruise Lines. Look at the amount of dilution here, 30% negative. And look at the interest rate they're paying. They're paying 15% interest rate on their loan. And look at the amount of loan they have. They got $12 billion loan. So this is not a small deal here. Unless this company performs very well, people start taking the cruise line. This company is really under the debt load here. So, and also they're diluting the share count. So you got to be careful with this also. And we got a few more, as you can see here. We got OLO. OLO is a really a takeout type play here. They help the restaurants to take out the food. Look at the amount of interest rate they're paying, 15%, and they got around $14 million of loan here, and also share. They're diluting their share count, as you can see here. And we got a few more, some famous names like Plug Power, also same story here. They're also diluting big time, as you can see here. And Plug Power, as you can see here, they also they do have their EPS, earnings per share, is negative. Company not making money, net margin big time negative. So you got to be looking at such stocks and try to avoid them. And the list goes on and on here. Look, we got Peloton and AMC here. AMC, as you can see here, same story. They're diluting the share count. Look, $10 billion total debt here, and they're paying 4.3% interest rate. So you should avoid such names, go after better candidates. And Peloton, as you can see here, we got Peloton right here. And they also issue a lot of stocks. They're also diluting their share count, as you can see here. And they also have negative free cash flow, as you can see here. And we got Bitcoin company Marathon Digital here. These guys are also diluting the share count, as you can see here, 17% negative, and so on and so forth. All right, we got Novax. Novax is a vaccine play, as many of you know here. They are also diluting, as you can see here. Novax, look, net margin is negative at this point. You got to be careful with such candidates here. All right, so we got a few more to go here. Look, list is almost coming to end. Gamestop also, look, these guys are also issuing a lot of stocks, 15%. They're issuing more stocks than retiring or buying back. And this one has got overall score 33, which is a little bit better, but they got a lot of debt and they're not paying too much interest rate on their debt, which is not too bad here. But you got to avoid such names here. And you got Natera and Sentinel. Sentinel was supposed to be killer. A killer stock when it comes to cybersecurity. Stock has not done well at all. Look, it's a negative net margin right now, and these guys are diluting their share count, as you can see here. So you should avoid such names and go after the better ones. And we got one of the famous one here, Affirm. Affirm also, it's issuing a lot of stocks, as you can see here. These guys have got about $4 billion debt, and they're not paying too much interest rate, which is not too bad here. Whereas AGL, look, they're paying a lot of interest rate here. Look, 10.9% interest rate on their debt of $56 million. So that's a big amount. And we got a few more dilution leaders here. We got Coupang. Coupang is a company back in South Korea. Look, they're also diluting their share count big time here. And we got a few more, as you can see here. We got App Loving, Bumble. Look, Bumble is also diluting their share count. And we got here Toast, same story. Spirit Airlines, same story here. And we got here one more, last one here, Globe. Look, Globe is also diluting. At the same time, they're paying a lot of interest rate on their debt here, $21 million debt. They're paying a huge interest rate on their debt. You got to be careful with such names. All right, so let's look at dilution leaders. Price less than $10. This list is huge. We look at a few top ones and go from there. So look, all these stocks, companies, stock price is less than $10. Many of these are very low price. Top of the list is ZY. Look at ZY here. They're diluting their share count big time. Look at the 289, negative 289.6. That tells you they're literally diluting their share count. So you got to be careful with such names here. And these guys are also paying a high debt on their high interest rate on their debt. ZY has got about $44 million debt here. And the list goes on here. We got Big Z, same story here. These guys are also diluting big time, negative 205%. And as you scan through here, we got a few more here. Many of you know these companies. We got Butterfly right here. Butterfly is also diluting big time. All these names are diluting their share count. And look, we got one more here, PayoMed. They're diluting. At the same time, they're paying a huge interest rate on their debt load here, which is a big one here. And we got a few more. As you see here, we got one more right here. Invesco, IVR. Look at the interest rate they're paying, and they're also diluting. You got to be careful with such names here. And we got BT is again a crypto play, as many of you know here. Look, they're also paying a high interest rate. They're also diluting. And we got, BNGO here, meme stock. Look, they're also diluting big time. And we got a few more here. Gritstone. This is supposed to be a a vaccine play here, curing the variants. This stock jumped up big time a while ago. Now it's cooled off here. Look, they're also diluting big time here. Probably they took advantage of stock going up and diluted big time, as you can see here. And we got a few more here. Funware. It's again, Funware is a meme stock, as many of you know, diluting big time, and also they're paying huge interest rate on their debt. All right, so all these folks, you got to be careful about these stocks here. Be a little careful. Don't buy these companies, especially one where there's a net margin negative and they're diluting their share count big time. All right, now we got a few more here. Look, all these names are priced less than $10, and look at the dilution here. They're diluting their share count big time. You got to be careful and watch few stocks. Few companies are paying huge amount of interest rate here. Look, we got few companies right here. Look at the interest rate they're paying on their debt load here. Huge interest rate. You got to be careful with such companies here. And we got a few more going on here. Look, we got Clovis Oncology here, CLVS. If folks are wondering why this company's stock is not going higher, look, they're also diluting big time. That's one of the reasons here. And list goes on here. We got a few more here. Sorrento also same story. Stock is stuck at $1 for a long time. Look, they're diluting their share count big time. The key is to retire or buy back the share, not to dilute. The moment you dilute like this, stock will come down. That's the big problem here. And we got 23andMe here. This is a good company, but look, they're also diluting big time here. That's why stock is not responding. It's not doing very well, as you can see here. And we got Bluebird Bio. This is supposed to be a great oncology / cancer candidate. Look, they're diluting big time, and stock is stuck in the mud for a long time. And we got a few more here. Look, we got Hims and Hers. Same story here. Look, huge dilution here. So that's why stock is not moving. And many of these guys keep watching the current ratio here. Sometimes current ratio is too low here. That tells you these companies don't have enough money to take care of their short-term financial obligations. You got to be a little bit careful of such names here. Also watch debt to equity ratio. If the debt to equity ratio is more than 1, it's good to avoid such names because they have too much debt on their balance sheet. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.